Hey, it's Clay, and this will be a video chart on ticker symbol NVAX. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually today's price action broken down into 30-minute time slices. I like you this time frame and does a good job of telling the quote-unquote story of the price, and then makes mapping out kind of the interesting setup going forward. Obviously, this one got beat down pretty bad today, but what's interesting, this will mean a little bit more to those of you that have traded for a while, where sometimes the stock will gap down and it gets beat up, and then the rest of the day it just continues to bleed and bleed and bleed. That was not the case here. The price, and I realize it's hard to see here, but that's just the nature of the gap down here. That's kind of what's thrown off the proportions. But the key thing here that occurred was that, sure, the price did gap down, but afterwards, it's not like it kept bleeding. It just eventually started to go sideways. And then to kind of top it all off during that final 30 minutes, you can see there was a nice little surge in volume. Nothing huge, but still a nice surge in volume for the final 30 minutes. Now, don't get me wrong, and I really wish I could say trading was this easy. Just because the price didn't continue to bleed and just because it went sideways and then had a nice surge in volume does not mean that this is for sure the bottom and that a bounce is going to for sure happen. Now, would it be shocking to see some sort of bounce? No, that would not be shocking at all. I mean, like I said, if you've traded for a while, then I'm sure you've seen stocks that get beat up in a hurry, can produce some very nice snapback reactions. Now, when I say snapback, I'm not saying this thing's headed up to $2 on Friday or next week or anything like that. But as far as some sort of bounce, that's not very irrational at all. And once more, though, just because I don't want to say, hey, you said it was bouncing. No, I'm saying it's a logical thought to have. I'm saying it's a rational thought to have that it could bounce given that it started to go sideways. But there is no such thing as a guarantee, which is why risk management is so important. Now, in the event it does start to bounce, where are some of these key levels of resistance at? Initial level of resistance, keep an eye on if there's going to be any sort of worthwhile momentum that gets going, is right up there at the 75-cent mark. And then not too far off from 75, you have that next level right there at about the 78 to 80 cent mark. So that's going to be kind of a little resistance zone. If the price can get up through there, especially on a nice little volume surge, then yeah, you could definitely pick up some momentum and maybe get some organic flow into this, which could create a nice little bounce on Friday and then going into next week. But one step at a time, and that first step is just simply continuing to at least go sideways. And if the price can get up through those levels, then we'll see if that can generate some more organic momentum or not.
One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.